This is Alan Farley from FX Empire. United Airlines is higher by about 6% after raising Q1 2022 revenue guidance. Taking a look back, the stock topped out right near the 100 level in 2018, formed this broad top, which it broke in February 2020, entering a very steep downtrend that dropped the stock to about a 9-year low. The subsequent recovery wave got up to the 50% retracement right here, which is also prior resistance, as you can see. It's also the 200-week moving average. Made 1, 2, 3 tests along it and then turned lower through the second half of 2021. Following this, sort of a bull flag. At least it was a nice little parallel channel. Well, it broke this parallel channel to the downside right here during the Ukraine invasion, which is adding a new layer of resistance right up here about 38.50 to 40, where the stock could trade later today. As you can see, it came down to the 618 retracement of this recovery wave. That's a good place to bounce. We're also at oversold on the weekly, so that's a good place to bounce. Taking a look at the monthly, as you can see, it's trying to move into a buy cycle, but there's really a lot of headwinds going on, especially with this big February sell-off bar. That's going to be very hard to get the stock back up to the mid-40s again anytime soon. Now, in the short term, the stock is below the 50 and 200-day moving average. It's extended off of this 50-day moving average. Now, that's very bearish. As you can see, both the 50 and 200-day are pointed lower. Now, this is pretty much a confirmed downtrend, obviously, and we also have this thrust wave. Now, if I had to take a guess on this thrust wave, this looks like a 1, 2. This looks like a 3 down followed by a 4, in which case I don't think we're going to get much higher than trying to fill this gap right here. So even the odds of the stock hitting 40 is fairly low before we get a downside test. Prognosis for the airline industry, it's pretty simple. COVID is starting to recede, but we now have international tensions in Europe, and Europe is a very big travel destination. And so I think we're going to get some pushback on where business travel is not going to grow into Europe the way it should. We get nice business travel here in the U.S., but we've got one big problem. United hedged their fuel prices for an average about $2.99 a gallon in the first quarter. Well, those hedging contracts are going to get a lot more expensive if crude oil stays up in this range, which is likely unless we get a settlement that removes sanctions. And you know what? That's probably over optimistic. So I think with high fuel prices, we're going to have problems attracting passengers here in the States. In fact, currently the cheapest ticket to go from Phoenix, where I live, to the East Coast is now about $600 in basic economy. Well, this is too much for the average person. It's probably too much for business travelers, especially with that number growing. Now, that was for June. Could you imagine how it's going to grow in March, April, and May before we get there? So I think business and leisure travel could be self-limited. In other words, keep growing from the pandemic, but not reaching 2019 levels, which are needed for sustained profitability.